Stop what you're doing. Seriously. A massive $700 billion AI investment wave is happening right now. And if you own any semiconductor stocks, you absolutely need to hear this. Everyone and their mother is completely fixated on the flashy AI software, right? But here's a contrarian truth for you. Most investors are staring at the exact wrong companies. I know the feeling. You're probably looking at these skyrocketing tech charts, terrified that you've already missed the top of the AI boom, and you're buying at the peak. Well, what if I told you the real multi-year winner isn't designing the software at all? Welcome to our deep dive explainer on Applied Materials, or AMAT. Today, we're breaking down their absolute monster Q 2026 performance. And I promise you, by the end of this explainer, you are going to know exactly why AMAT is the ultimate picks and shovels play of this entire AI gold rush. So here's a big question for you to chew on. Who actually builds the AI revolution? I mean, physically builds it. When we talk about AI, it's always about, those incredible chips from companies like NVIDIA or the massive megafactories over at TSMC. But who is actually supplying the physical heavy-duty machinery required to make those highly advanced chips in the very first place? Think about it for a second. You cannot just magically wish an AI superchip into existence with some clever code. You literally need to arrange atoms perfectly on a microscopic scale. It is mind-blowing engineering, and it requires a very specific type of company. All right, let's map out our agenda for today so you know exactly where we're headed. First up, we'll look at the macro AI infrastructure boom. Then, we dive into those record-breaking Q2 2026 earnings. Third, we're unpacking their strategic partnerships in tech. Number 4 is the balance sheet and valuation. And we'll wrap the whole thing up with the current Wall Street verdict. Okay, let's jump right into Section 1, the AI infrastructure boom, and why this is essentially the new gold rush. To really get this, you need to understand something called wafer fab equipment, or WFE for short. Basically, AMAT isn't designing AI algorithms. They aren't even designing the chips themselves. They are building the critical, highly specialized machinery that makes companies like TSMC and NVIDIA actually functional. It's like they make the factories that make the chips. Without wafer fab equipment, the entire AI revolution literally stops in its tracks. Period. And you don't just have to take my word for it. Look at what their CEO, Gary Dickerson, has to say. He pointed out that this rapid global build-out of AI computing infrastructure provides, and I quote, an exceptionally strong foundation for sustained multi-year revenue and profit growth. So the industry isn't just ordering a few machines here and there. They're systematically pouring capital directly into AMAT's sweet spots, like leading-edge logic, DRAM, and advanced packaging. Which brings us to Section 2, record Q2 2026 earnings by the numbers. Let's pause the technical jargon for just a second and look at this absolute mammoth of a top-line figure. $7.91 billion. That's just for a single quarter. To put that in perspective, that represents an 11% increase year over year. When a company that is already operating at this kind of massive scale manages to grow its top line by double digits, that is a crystal clear signal that customer demand for their gear is just off the charts right now. But hey, revenue was only half the story, right? The bottom line is honestly just as impressive. They absolutely crushed Wall Street forecasts. Analysts were projecting around $2.68, but AMAT pulled in a non-GAAP earnings per share of $2.86. So that's up 20% compared to this exact same time last year. 20%! So the real so what here is how efficiently they are converting all that massive revenue into actual profit. And that brings us to their non-GAAP operating margin, which hit 32.1%. Honestly, maybe the most impressive part of this whole earnings report is that they expanded this margin by 1.4 points year over year. In the heavy manufacturing world, proving you can manage costs efficiently while simultaneously scaling up operations, well, that's kind of the holy grail. It means more of every single new dollar they earn is flowing straight to the bottom line. Moving on to Section 3, Strategic Partnerships and Tech, specifically looking at their epic collaborations. Just take a look at the heavy hitters on this list. It is an absolute who's who of the semiconductor world. AMAT is locking in incredibly deep supply chain integration by partnering directly with the biggest names out there. You've got TSMC handling foundry and logic, SK Hynix and Micron for memory, Advantest for testing, plus some elite academic institutions for that early stage R&D. By co-innovating right alongside these giants at their epicenter, AMAT is dramatically slashing the time it takes to get next-gen tech out of the lab and into the real world. Now, here is a forward-looking metric that should absolutely make you sit up and pay attention. AMAT expects their advanced packaging revenue growth to exceed 50% in calendar 2026. Why does that matter to us? Well, as AI chips get more and more powerful, they generate a ton of heat and they need to connect to way more memory. That requires much larger body packages. So AMAT's really smart targeted acquisitions, like grabbing the next business, perfectly position them to capture that massive 50% surge. All right, Section 4, balance sheet and valuation. Let's check under the hood at their financial health. When we objectively line up their assets against their liabilities, what you're looking at is a legitimate fortress of a balance sheet. They are sitting on $6.3 billion in cash and equivalents compared to $5.2 billion in total long-term debt. Look, in a highly capital-intensive industry like this, having more cash on hand than your entire long-term debt load, that gives management incredible flexibility. It lets them navigate market cycles, pour money into R&D, and aggressively go after new acquisitions without breaking a sweat. Plus, their day-to-day operations are just printing cash. In Q2 alone, they generated $845 million in cash from operations. And the best part? They aren't just hoarding it like a dragon. They're actively putting this cash to work to reward their shareholders, including dishing out $400 million in share repurchases just this quarter. And speaking of shareholder rewards, if you trace back their 19-year dividend history, it shows incredible stability. They started paying dividends back in 2007, and right now they are riding a 9-year streak of consecutive increases. They just capped this off with a massive 15% quarterly dividend hike, pushing it up to 53 cents per share. Just to put that into perspective for you, they have more than doubled their dividend per share from just 4 years ago. That's wild. Finally, let's head into Section 5, the Wall Street verdict and analyst sentiment. Out of 40 recent Wall Street ratings we pulled for this analysis, the sentiment is, well, overwhelmingly bullish. We're talking 32 buy ratings, 8 holds, and exactly 0 sell ratings. 0! This kind of consensus really highlights the broader market's supreme confidence in AMAT's positioning as this massive AI supercycle continues to ramp up. However, to remain completely objective and impartial here, we do have to look at the spread in price targets. The highest target out there sits at $575, which implies a nearly 15% upside. But the lowest target drops down to $358, suggesting a potential 28% downside. The fundamental divide here is actually pretty simple. The bulls are focusing on the fact that AI demand is vastly outstripping supply right now, meaning AMAT's equipment is heavily backordered. The bears, on the other hand, are a bit anxious about operational bottlenecks. They're noting that supply chain complexities and limited cleanroom availability could cause some manufacturing delays down the line. So, as we wrap up this explainer, I want to leave you with one final big picture thought. Applied Materials is undeniably operating from a position of profound strength. Record revenues, expanding margins, unmatched industry partnerships. But in this modern technological gold rush, we really have to ask ourselves, does the ultimate ceiling depend on how much gold is theoretically out there, or does it simply depend on how quickly companies like AMAT can physically manufacture the shovels? It is going to be a fascinating dynamic to watch as we roll into 2027. Keep learning, stay curious, and we'll catch you in the next explainer.